it looks like the market kind of expected what they gave us and wasn't that impressed. What can push oil back up through 50 and up to, I believe your forecast is about $60 a barrel in the second half?
Yeah, I think one of the key things, Matt, will be the real evidence of a pickup in global demand growth. You know, right now the concern is that Permian Basin production is going to completely offset the OPEC cuts. That's unlikely. The market did effectively discount everything that they were guided to by OPEC in the prior 10 days to their decision. But when you think about the 5 concerns that are out there, oil demand growth globally, shale production growth, what's happened, where are the embedded declines in the conventional base, and then the questions that came up with the budget in the U.S., whether the SPR will be selling oil or not and offsetting some of the OPEC actions. And then finally, do we have the classic cheaters? Well, 3 of those 5 really are likely to exceed expectations, but it's not going to happen this week or next week. I'd say in the course of this summer, to the degree we get a real sign of a pickup in global demand growth, that'll put these concerns, I think, more in perspective than they are today.
Tom, it's Naira here in London. Yes, certainly demand is one thing we very much have to talk about, and you did mention the U.S. shale there as well. But if I just look at OPEC, how much do you think there could be a cap on the upside, just down to concerns that OPEC might go back to this pump-at-will policy that it had in 2014 that is still pretty fresh in traders' minds? Well,
it's a good question. I actually believe that the bulk of what they're going to achieve will be accomplished by Saudi Arabia, Russia, and Iran. And they're not natural allies on all issues, but on the issue of wanting a higher price and, frankly, very much needing higher prices, they are aligned and they're not confused. They're more organized today than they have been in any time that I've observed in the last 4 decades. So the other players on the margin, you could have some expectations, realize that there'll be some increases in Brazil and some in Canada and so on, but it's all within the margin of error vis-a-vis what those 3 big countries do. And they're aligned. They're not confused about whether they have to deliver on expectations. So one of the real key things go ahead.
I'm sorry, Tom. I look at OPEC. We've got a function in the Bloomberg OPEC Go, which is pretty fantastic. Gives you a wealth of information. But the bottom line is OPEC controls so much of the world's oil. Why can't they just say, we're not selling anymore until prices get where we want them to be?
Well, we're going to find out. They're going to get tested on that proposition this time around because that's the function of the Permian Basin. The Permian Basin is going to grow, and that's going to keep their feet to the fire. And unless they get either the pickup in global demand or they have to then come through with the real cuts. This last time around, the Saudis exceeded what they promised. Iran actually behaved as was expected. They couldn't get to the ceiling they were given. And Russia only delivered about 1/3 of what they said they would do. This next time around, if Russia doesn't get up over half and probably closer to 2/3 of what they promised, then nothing will happen in terms of improvement in price. I think that's probably not going to happen. I think they will surprise on the upside.